Hello friends, this is your finance friend Akash Tyagi and I welcome you to my YouTube channel FinMax with Akash. Our today's video will cater your concern why is the stock market crashing, or to be specific, why your portfolio is in big red. Before starting our today's video, let me give you a brief introduction about myself. I'm MBA qualified professional having 7 plus years of experience into corporate finance and taxation. So first and foremost, let me tell you, you are not the only one who is getting this hit. Even the big players in the market are not excluded from this big fall. However, if you are quite new and entered the market at the time when there was a big bull run happening in all stocks, then it might be possible that you have entered your stocks at its all-time high prices and might be facing major losses compared to old investors. Actually, every portfolio is linked with the market, and currently the market situation is not healthy. And the current market sentiments are in fear due to many factors that we will discuss later in this video. If we check the chart, we can see since October 2021, the Nifty has fallen approximately 16%, and relatively this is the approximate return which experts ask you to expect in 1 year from your portfolio. Now moving on to your portfolio must have taken a hit as per the riskiness of your stocks that you have picked. If you have invested majorly in the small cap or the mid cap stocks, then it might be possible that your portfolio is even more down than the market. It is because we all know higher gains have higher risk. So moving on to our video, let's discuss the reasons why the market is in downtrend. There are many reasons as of now which have impacted the stock market negatively. Let's discuss them one by one. First and foremost, the downfall started in the name of correction, which was required to bring down the expensive market to its rational level, which was highly awarded after the COVID bounce back. I hope you relate and agree with this point. Secondly, the global tensions like the Russia-Ukraine war, new COVID cases has joined hands with the market correction scenario, and which leads to further downfall in the market. And now, after both the above impacts, when the market was trying to be stable, then the new inflation countermeasures taken by the RBI and the government has brought down again the market to its past year level. So here in this video, we will focus on the recent inflation countermeasures taken by the government and the RBI, which led to further downfall in the market. But before proceeding further, let's know about the inflation in brief. Inflation means rise in general prices of goods and services, or in more simpler sense, inflation means महंगाई. Recently, you must have felt that the daily fruit, vegetables and groceries are way higher in the prices than they were in the past 6-7 months back. So you would ask, is there any quantifiable number by which we can say कि हाँ महंगाई तो बढ़ गई है, लेकिन how much it has increased? What is that number? So the key lesson here is inflation measured by the CPI in India. CPI means Consumer Price Index, which is currently at 7.9% in April 2022, and this is at its all-time high since 2014. And as per the RBI guidelines, the inflation should be near to 4%. So by this, we can say that inflation is twice the rate as it should be. So now you can understand, बिल्कुल ये एक चिंताजनक बात है. And the RBI and the government should have taken some measures to control this inflation. So in this video, we will dedicatedly focus on the countermeasures taken by the RBI and the government. Now, in order to counter the inflation, in May month, the RBI has increased the repo rate by 40 basis points. And again in June, it raised the repo rate again by 50 basis points. What is happening here is that now the RBI will lend money at higher rate to commercial banks, which will increase the finance rate for banks as well as the retail customers like you and me. In simpler sense, now the loans will be at higher rate, which will decrease the liquidity in the market, hence helps the economy to counter inflation. The second countermeasure which the Indian government had taken was that they imposed a 15% tax on export of steel and iron, which made the steel stocks prices go down at record level. That you can see from the chart that I have presented here. Thirdly, the Indian government on May 24 announced that they are limiting their sugar exports to certain level to ensure sugar availability and price stability within the country. That will increase the supply of sugar in the country, that will lead to decrease in price of the sugar. Lastly, but not least, the Indian government has also announced relief in import duty on edible crude oils, which will come to almost 0%, which will increase the supply of edible oil in the market and resultant decrease in the prices. These are few of the reasons which leads the market to go down and follow the downtrend. I hope you relate and agree with all the above reasons mentioned in the video. If yes, please like the video, and for more insights like these, please consider to subscribe my channel. Till then, have a great day and bye bye. Thank you.